What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 16th of 2020. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I really want to spend some time to dive into our time horizons for this next cycle, to take a little bit of perspective at some data science to showcase us how long it's going to take for Bitcoin to really reach its new all-time highs. So we're going to be revisiting some topics, talking about some new things, but let's just go ahead and dive straight into it. I want to go ahead and take a look across the board for the market here over the last 24 hours. We can see that the vast majority of cryptocurrencies are in red territory, as we've seen the general market starting to take a little bit of a pullback. And for the first time in a long period of history, we're starting to see some divergence here between Bitcoin and the broader altcoin market. We can see here, just taking a look at the top players here, how Ethereum and many of the plays down here, a lot of the altcoins which have been outpacing Bitcoin, now starting to take a bit of a hit here. Bitcoin up 2%. So a question here that I want to talk about as well is whether or not we're starting to see a divergence or a significant kind of pull away from altcoins against Bitcoin. Along with that as well, I want to talk about market scale here, guys, and our broader topic. Again, the broader DeFi market is down today, as we talked about with altcoins. But I love a new feature that CoinMarketCap has where they have these new indexes like for DeFi and in different categories of the crypto space. And DeFi is a total market in the sense that the tokenized value is just $12.85 billion. Think about how small that is in the grand scheme of what DeFi can bring. Same goes for cryptocurrency market cap in total, right? $346 million, not that much. Global real estate market, tens of trillions of dollars. It actually, and I think if you're talking about the global real estate market, hundreds of trillions of dollars. If you're talking about treasury markets, just U.S. government bonds, tens of trillions of dollars. Global bonds for governments, over $100 trillion. Equity markets, over $100 trillion. You get the gist, right? Gold markets, 12 to 14 trillion, depending on the valuation. Now let's go ahead and talk a little bit about Bitcoin right now. I want to talk about the short-term horizon, and then we'll dive into this kind of topic of the longer term here. So in the short term here, looks like price is actually doing quite nicely. It doesn't seem like the market right now, especially with how fast this is recovering, and with pretty substantial volume, not too bad. If you look across the board, pretty decent volume here. And the thing that I'm noticing is that it looks like we're going to get a pretty quick kind of reversal here where price leaps back upward. And I think that what we've got a chance for is for Bitcoin to recover its losses from this pullback, come up here, right, either to the same level we hit resistance here and here, or maybe even slightly higher at 13K, kind of setting in that higher weekly close, and then coming down and making this level this level of previous resistance new support. One thing that I guess I kind of didn't really pay attention to, and where I think I got things a little bit wrong in regards to like where I thought Bitcoin would find its next level of support. I thought it'd be a little bit higher because we were watching a trend line. If we draw a line here that was going through, right, and it was considering support and resistance, and again, where prices was looking to make support up here. But it turns out here that I think what a lot of traders are watching are very big even levels, and they're looking for the kind of flattened levels of support and resistance. You can see back here, 12K, this level that we have on here in our chart here, this golden line, weighed down price here, here, and here. And now it's a question of whether or not we can make 12K support, because after that, if you really take a look at Bitcoin's chart here, right, beyond that, we just have the parabolic run up here to 20K. We have a little bit of like Wix price action here where the price came up, but it really faded very quickly. We didn't have any weekly close up in this range. So this is really uncharted territory. If we're able to get a weekly close above this range, even just coming down here, making this support and then climbing up a bit, this is really going to signal to the bulls that it's time. Right? It's time for this to start moving higher and for us to get out of this kind of sideways consolidation we've been in since here in June of 2019. And really, if you want to go all the way back, since January 2018. So very, very important to keep in mind here. Now, I want to go ahead, let's talk about this kind of longer term perspective here in regards to the markets. Outside of that, I just wanted to dive into altcoins very quickly. Altcoins look like they're going through kind of a sideways channel between 38 points and 40 points. So just keep watching for that. If we break that, our next level will be 36% here. But I really don't see anything too significant happening. I don't think we're going to get any sharp corrections like we had back here because we're not getting as sharp of run-ups as we used to. All right, so we'll jump back into this Bitcoin chart in a moment, taking a look at the long term. We're actually going to dive into BLX here, which is going to give us our longer term chart. But I want to go ahead and look at the data science models here. So for those of you, again, who want to know my kind of stance on Bitcoin, guys, as much as I talk about DeFi, as much as I talk about Ethereum, and yes, I personally do believe Ethereum is going to outpace Bitcoin in this cycle. Again, you guys, I know some of you don't think Bitcoin or Ethereum, you think one or the other is more fundamentally valuable. It doesn't matter really what the fundamentals are at the end of the day. It's where the market's going to take it. And quite frankly, I'm quite confident in this case that not only the fundamentals are strong in Ethereum, but along with that as well, that the narrative is much stronger, that the kind of hype and the excitement is also much more towards Ethereum. But I digress. That doesn't matter. I still believe at the end of the day that the broader cryptocurrency market is doing fantastic. And I think it's going to continue to do fantastic. So it's not a game of what's going to do better and this and that. I believe Bitcoin concisely is going to do well because the economics of Bitcoin make total sense. The narrative is there of a store of value. But most importantly, the inflow and outflow economics are at play here. So we have the halving event, which reduces the supply issuance. And along with this as well, we have people stacking Bitcoin at a record pace. Now, this is one of my favorite data science models here. It's very simple. It's very auditable because you can check it on chain anytime you like. But this is the 1 year HODL wave metric that's basically measuring very simply how much Bitcoin has not moved in more than a year or more, right? So we can take a look at the unspent transaction outputs or the UTXOs and see how much Bitcoin has not moved in over a year. And what would you know? We're actually here at an all-time high. Now, we broke out to an all-time high here back in late June as we broke out of the halving event. But there's a dynamic that's continuing to climb this number here. It obviously means that the higher the number goes, the less people are moving and sending their Bitcoin. It likely means more people in general, not all of them, but more of these percentage points are continuing to just simply hold long term. And what we've seen here is there's been an acquisition spree from a few select kind of medium, large size companies. We've seen a microcap strategy. Again, a company that wasn't even related to cryptocurrencies, now buying almost $500 million of Bitcoin in total reserves, right? And Bitcoin's market cap, just bear in mind here, Bitcoin's market cap is sitting around 200, we can even verify here, like $200 billion exactly speaking right now, excluding the 900 million, right? So if you just want to rough that off to $200 billion, that means microcap in this case, their portfolio position, considering the price increase this week, is probably more around near 500 million. They basically own 1/400th of the market. One company. And along with that as well, we've got Grayscale as well continuing to stack up Bitcoin for its Bitcoin ETF that a lot of people are investing in, GBTC. So considering this, we've got a massive acquisition spree of companies. And with a reduction in the new issuance of Bitcoin, it makes total sense why we're seeing price hold up as well as it is. In fact, you'd almost expect it to be holding up even better. Right? So as more of these companies who are having more of a long-term philosophy are picking up large sums of Bitcoin and the issuance has been reduced here, this is what sparks off the next cycle. But what I want to talk about here that I still think a lot of people don't understand or aren't really comprehending here in regards to the long-term perspective here for the cycle is that we are going to have a longer cycle than before. Okay, it's very important to understand this. I know a lot of people want things to happen very quickly, especially if you've been seeing what's going on in the crypto, DeFi space. You're probably expecting that, this cycle is going to top out in 2021. I really don't think that's the case, guys. And I understand that crypto markets can move very quickly. They can play catch up. They can have a very slow initial start to the cycle. And then when they break past the all-time highs, then they can just soar up to the sky and set radical new price highs. Doesn't usually work like that. And quite frankly, if you're used to the sugar craze of 2017 where things were just so easy and happened 24/7, double-digit gains every single day and things like that. I'm not saying that we won't get that. We've been having a lot of that with DeFi. But the major thing I want to talk about with Bitcoin here is that we're probably not going to see that, right? And the reason why is if we take a look at the historical chart, each cycle adds about a year's worth of price action before we reach, the top in the market, considering where we start from the bottom. So 48 weeks here for this cycle, 106 weeks here, 152 weeks, 205 weeks is the target range here. We can go ahead, take a look at the month here, monthly chart. You can see it much more clearly. 11 months, 24 months. So again, adding 13 months here, the higher band. And here you can see that we added 11 months here from bottom to top, lower band here. And reaching in the middle here for a 12-month addition, that leads us to 47 months for this cycle, topping out in November of 2022, almost stepping into 2023. So this is our time horizon here. Now, again, I want to emphasize that if we look at price here, guys, and look at kind of like the kind of lines here within our general time range, we can see that we're pretty much on pace for where we should be, right? I don't mean to say that Bitcoin's bearish or anything like that. It doesn't mean that I'm not bullish on it. I'm saying it's going to 100K at a minimum, right? That's a big misconception that people have. They're like, "Oh, Nick, you're just ragging on Bitcoin." I own Bitcoin. I love Bitcoin as an asset. But the problem is that people's time horizons are way too optimistic. They're way too optimistic. And I don't want people feeling like they're getting burned or being upset when things don't go to that price range so quickly. Now, some people always point, Nick, look at this line on the chart. This is the stock to flow model. It says that it will be going up towards 88, 90K, probably around the 100K range in May of 2021. Nick, you've been blown BTFO. You're like been proven wrong. The stock to flow model knows all. Well, if we look at the last cycle from the stock to flow, what we'll realize is that after the halving initiated back here in the summer of 2016, as the fair value of Bitcoin actually went up into July of 2017, this is basically where the market should have topped it, around 5K, and it should have topped out in a year after the halving in July of 2017. But it didn't. What happened was we had a delayed response here, and what happens is we actually got up to the fair value range in October of 2017, and then massively overshot, just like we did back over here for the stock to flow model, towards 20K. So what does this tell you? It tells, well, I can just give you guys my perspective. Again, it's not the right perspective, but it tells me that sometime well beyond into the future here, that we're going to be having a later cycle top. We're expanding these cycles, right? Again, where we topped out initially at the peak here of the stock to flow model, we started to have a longer period of time before we got there. I think very well that we're looking at 2020 here, right? A much longer term cycle where we're going to actually have our top out here. And this is not only where on the fundamental range it leads more towards 100K, right? The later band of this 4-year or the 4-year halving event cycle. But along with that as well, I think that this is going to give us the range to go beyond 100K possibly, maybe even towards 150 to 200K. The one thing that I always love, a guy named Chris Catcher we've had on the Dash Report, he's a good friend of mine. He brought up a very good point, and that is going to be that you don't want to bet against Bitcoin when it's in the parabolic, crazy phase that it can go through towards the peak of its cycle, where it gets the vast majority of its gains. You don't want to bet against it. But again, bearing in mind here that our time horizon is probably going to be much longer than most people intend. Another thing as well that I think is very important to look at, and we had it kind of drawn on our BLX chart, is the logarithmic growth curves. Another favorite from people. And as much as this is important and it is very valuable, and I think it's still going to hold true, notice how this has been playing out with the logarithmic curves. We used to hold very nice and steady here, again, in regards to the logarithmic curves, and now we're starting to dip below it. And again, some people would say this is bearish. I don't think it's bearish. I just think more than anything, guys, that this is proving we're not going to be accelerating anytime soon. We're going to slowly kind of ride up along this for a while, setting up those higher lows, right? Holding in this range like we did before. We're not going straight vertical anytime soon. But that's okay, guys, because quite frankly, the reason we're positioned in this market is not because of what it's going to do in a week or a month, right? I mean, if you're doing it to day trade in this market, go ahead. It's probably not going to work out. The vast majority of day traders are going to lose. And even if you can make money in this market day trading, you're probably going to get outpaced by what you could have, performed, or how your portfolio could have performed by just simply holding crypto assets. But I digress. I don't mean to be negative here. My overall arching point here is that we're looking for that moment where we can slowly climb up towards 20K, possibly get a little bit of a rejection, come back up to retest it, and continue on in the cycle climbing up into 2022. Maybe even 2023. Who knows? We might break the odds here and go even more long term. I know there's a few people calling for that. All in all, though, I try to kind of meet in the middle, be as conservative as possible, and state that, this is probably going to take a little bit longer, and the multiples are not going to be anywhere near what we saw last time. It's just, again, if you guys want to go off the assumption, again, some people will say, no, this one's going to be just as crazy as last time. If you want to take the multiples here from bottom to top, right, it was basically 12,380%. If we drag that up here, let's see if we can get it here. There we go. Almost there, right? Okay, a little bit less than this. You're talking about a little bit below 400K. You want to place your money on that? I really don't think that's the case, guys, because if we go to that kind of price range, you're talking about Bitcoin nearing gold's valuation in this cycle. And again, could possibly happen, but I really don't think that realistically is going to happen in this cycle. We need to have, this takes time to build Bitcoin as an asset. But all in all, I mean, if we can go here to 100K, if you consider the fully diluted market cap of Bitcoin, right, the total supply, you're talking about a $2.1 trillion market cap. Even the coins that have been issued, that would be the market cap there. So I think in this case, that's a very fair valuation, a very fair ask for Bitcoin as a digital asset, because we have to consider there's room for other digital currencies. Again, whether or not you think those assets are worth anything, they are a portion of the market cap, and they're going to have a valuation just like Bitcoin. So anyways, guys, again, one thing I'd be looking out for, one thing that I've constantly been keeping my own eye on, is taking a look at this kind of range of resistance for volume here. BLX is a very well-known and reputable way to analyze Bitcoin's price. And you can see here, this is an aggregation of all the volume. Wait until we get a significant volume break here. And I think we're going to get that when we cross 20K. It's not going to come yet. Right? It's probably going to take a little while, but you can get an idea here as we're squeezing in on this volume down here. There's not much of a range here left until Bitcoin's going to find its break point. And I'm very, very excited for that time whenever it comes. But anyways, guys, I want to go ahead and spend a little bit of time here at the end of the video to just spend some time to discuss our first ever community challenge for the digifox wallet. And that is the Invest in Yourself challenge. Now, for those of you who may not know, a digifox is a crypto wallet that I created that's aimed at plugging into all of the kind of centralized finance and decentralized finance services and really making crypto extremely accessible for everyone. And one big feature that we have in there is the ability to earn high interest on your savings through providers like Celsius Network. And we have our first ever community challenge, the Invest in Yourself challenge, which is us giving away $2,000 to our community members who are simply investing in themselves. Simply put, investing money into their Celsius Digifox account. Now, if you want to find the details for this challenge and how you can win up to some of the prize pool of $2,000, you can check out the Digifox channel where I have a video detailing the rules of the challenge in this case and how to participate. And along with that as well, on our website, you can go to the Invest in Yourself tab here at digifox.finance. But we've got a lot of great photos just kind of detailing how it works. And along with that as well, all the details you need to know on what the prize rewards are and how you can get engaged. But it's open to anyone who wants to download it and meet the rules. And we're really excited. We've already got thousands of entries so far, which has been phenomenal to see. Just to see so many people coming in, getting really excited about the challenge. And again, there's a lot of ways as well where you can grow in this case. If you want to get 4 free entries in this case without even having to put anything in, just go ahead and like and share our major social posts, which you can find pinned on our social pages, in regards to Twitter being probably the biggest one in that case. And also follow us as well in that case on social media so you can keep up to date with everything. But anyways, everyone, that's it for the video. I'm excited to see not only Digifox, but also the broader market of DeFi and crypto grow. I'm excited to see Bitcoin grow as an asset. Again, keep positive, guys, but at the same time, keep your time horizons more conservative. The more conservative you can be, the more happy you will be with the end result in the market, and the more smarter you'll be able to trade and invest in the long run. All right, so everyone, that's it for the video. Thank you all so much for watching. If you like this one, drop a like, consider subscribing and hitting the bell icon if you haven't. That all being said, everyone, I hope you're having a fantastic day, and I'll see you all in the next video. Take care, everyone.